Okay, good evening. Welcome to the fifth class in QuickBooks. So we emailed again today a slightly revised version of the same syllabus, where each step throughout the process it gives a recap of where we're holding as far as transactions and the amount of invoices we billed and the amount of payments that we have done. And I'm going to demonstrate, first of all, how to do a report, a P&L report. P&L stands for profit and loss. And then we're going to do a balance sheet. And I'm going to discuss as I wrote in the email, there's accrual and there is cash accounting. Okay, so the default in QuickBooks is going to be the accrual method, meaning that's the way it does unless you tell it otherwise. So let's see over here. I'm going to share the screen. Okay, how do we make a report? So we go to a drop-down menu, the menu bar, and it's called Reports. And we go down and Company Financial. So that's the first thing. There are many types of reports. That's ultimately the main reason why everything is put into QuickBooks is what do we do with the information? It gives us many types of reports, how we feed in, whether it's the sales that we do, the income that we have, the payroll, the inventory, everything, and we make reports out of it. It gives us an understanding where the company is holding fiscally. Are we doing better? We can make comparisons to previous years, as you see over here. Previous year comparison, you can compare periods, not only years. You have sales. The first thing in the second section called Company Financial. So everyone could do this actually right now. Is you could drop down to Company and Financial, and we're going to do two reports. One is the first one, the profit and loss standard. And the second one is going to be in the second section called balance sheet standard. So we want profit and loss standard. That's number one. And make sure that in the case, there's a box that says this month to date. We want to change it to this year to date. Okay, or this fiscal year. There's a drop down called this fiscal year. Note that right under this fiscal year, there are two lines, two choices, report basis accrual or cash. Now, actually, in the accountant software, we have the choice right here to toggle back and forth cash and accrual right over here. I think in other softwares, other versions, you have to go into the settings and change the report. It's not readily available over here just to toggle back and forth. Right now, we're going to leave it in accrual. And we could just open up one more report called Company and Financial and Balance Sheet Standard. And then again, we're going to choose this fiscal as of today. Okay, so that we will leave. Again, so the profit and loss will be this fiscal year, and the balance sheet will be this fiscal year to date. I'm going to pause and wait for people to get a chance to pull up those reports. So you can see it on your screen. Now, I'm going to demonstrate on my report. You might want to go on the Zoom, but I want you to see how to create the report for starters. So later on, when you will be playing around with it yourself, you'll see how to do those reports. So I'm going to pause a minute again. The way to do this is you go to the menu, reports, you go down to the second section where it says Company and Financial, and we choose the first choice, which is profit and loss standard. The second thing we're going to do is we are going to make sure that in the ribbon underneath the menu bar, it says this fiscal year to date. You can actually say this fiscal year or this fiscal year to date. It's the same as of now. And let me see if we have questions here on this item. Not yet. Okay. Fiscal is a term used for financial. because there are calendar years and fiscal years. Like the city of New York, their fiscal years from July to the beginning of July to the end of June. When you have a company, you can choose any month you want, ending month. So that's why the assumption is by default, when you say this fiscal year, it's still going to pull up the calendar year. But again, if your company is running on a different financial year, that means when you do your taxes, you count the income, let's say from February through then to January because you're a holiday, or maybe even from the beginning of March then to February. So then you would change the settings that QuickBooks should pull up the annual reports on that period. Okay, so we have here in front of me the balance sheet, and we have also the profit and loss. So I'm going to discuss the terms of accrual and cash as I go along. Just a point highlighting for you that on my screen it says accrual. If you have our version of software, it's also accrual. Okay, right now, whether your money is in Chase or whether it's in Citi or combined, as long as the total amount of money here is 1423 under checking and savings, a combination of two accounts, that's fine. Okay, we went back and forth a number of times. We have, actually, 1 second. Okay, I happen to have the balance sheet open right now, so I'm going to discuss the balance sheet for a moment. So the balance sheet is a permanent picture of the company, what the company is worth. The money that's in the account is permanent. It doesn't disappear from period to period. If you make more money, it adds to the money you have previously. Accounts receivable don't disappear. Accounts receivable is money which the customer owes you, and you want to get that money. It doesn't make a difference if he's 30 days late or 5 months late. He's delinquent. Maybe you have interest and service charges, but that receivable does not disappear. And if you double click on the accounts receivable, we will be familiar with what's here. We have here the open receivables is Chaim Cohen. One sec, actually. So it shows the way receivables here works. It tells us what the whole receivable was, and these show up as debits and credits, right? We say that the way a receivable is added to an account is receivable is an asset, and the assets increase with debits. So the total debit of Chaim Yankel, his receivable is $225. The total debit of Mrs. Cook was $140. You want to know how? You go further, you could drill down, double click on the $140, and you'll pull up the invoice, which was the 7 hours of housekeeping at $20. I'm going to close the invoice now. And I'm going to continue going down. This was so first we had all the debits. This was made on 11/4, as it shows the date. There were 4 invoices, number 1, 2, 3, 4. Those are the 4 invoices. Then we credit the receivable, right? It means we're taking away the asset. Why are we getting rid of the asset? Because we're getting the cash, we're getting the payment. We said we first got check 1,012 from Chaim Cohen. He gave 150. So it reduces the total receivable of 1635. And it drops it down to 1485. Then we got from Chaim Cohen his credit card, $400. So it reduced it another $400, went from 1485 to 1085. And then we had Plotney Almoni, who gave us $670, and it reduced our receivables to 415. So in this way, we see the general amount of the total of 415. You won't necessarily, you have to figure out by yourself. You wouldn't see exactly who owes what. You just see that with full debits, and you'll see the credits that were made to the receivable. If you want a different report, that you could look at the collections, or you could report, or you could look at the customer. But this is just showing you how QuickBooks essentially is a debit and credit. Now, what happened when we credited the receivable, right? For example, we took the $150 from Chaim Yankel. So we credit the receivable, but everything is a dual entry. So you see here, it's called undeposited funds, right? It's a new asset. Previously, it was a receivable. So again, when we make an invoice, not always this column split will give you what the second side of it, but in this case, it does. We debit an asset called account receivable, and we credit an owner's equity account called sales income, right? So the income went up, right? In this case, doesn't show you both sides of the credit because it's only showing us the account receivable side. So account receivables are the debits, but the other side of the receivable is a credit to sales. And then again, when we credit the account receivables, what's the other side of the entry? The other side is a debit called undeposited funds. It's another asset, but it's not in the bank yet. And that is why when we go to make deposits, we are taking the money out of undeposited funds and we are putting it into our bank account. Let me see what any questions on this part of discussion of the account receivable. Someone's asked me, how do I get to the page that has the bank statement with the names? This doesn't have bank statement. This is the account receivable. Coming, you double click on any line that has an arrow, it'll drill down further. Okay, my number is okay. I'm gonna X out the X underneath the second X, which closes the window, brings you back to the balance sheet. I'm back by the balance sheet. Again, whenever you highlight a number that has an arrow comes there, it means you could double click on it and go in. Shows a Z with the spyglass, and you could zoom in and see more. If you double click on the bank account, you would see all the deposits that are in the bank account. It'll bring up the check register. Actually, this is not a register. This is a different view. This is a debit and credit view. And then again, you see the debits, you see deposits. Deposits are debits. Our bank account goes up as we put in money. We put in the first $500 members' equity. We have the 1,220 split. Deposit split means that it's in multiple accounts are being affected, or multiple receivable accounts or payable accounts. It's not just one item, as opposed to the first $500 was members' equity. It was one person giving the whole deposit. Okay, and we said again, office rentals was paid off by a credit, so it generated a zero check. Again, when we made payments, what happened? Credits went out of the bank account. So we credited 177. Then we paid Essence for $76. We paid Super. It's a check. The check credits the asset account. So now I'm going to bring up the original slide, which we had, and you'll see how this falls into place. And over the course of a couple of classes, we'll reinforce these debits and credits, because QuickBooks does this automatically when you make the checks, so when you make the deposits, so when you make the payments, and when you receive payments. But when you have to do journal entries, you have to have an understanding what's the right debit and what's the right credit. You don't want to do the reverse. So where's the slideshow here? Okay, let's see. Let's pull this tab. It's going to take us one more second. Welcome to Okay, so if we remember, we had assets equals okay, accounts ability, there's debits and credits. See if we can zoom up on this one here. No, it's not. Okay, so we have here the assets on the left, right? Debits is recorded on the left, and the assets increase. So let's see if we go back to the QuickBooks, and we see how the assets are increasing when we make these deposits. If we go back to, and we see over here, the credits are obviously the opposite side. That's decreasing the assets, right? The bank was holding 1720. And as we take money out, we took out 177, we took out 76, the bank account balance is dropping. That is consistent with what we said over here, that okay, that if we go to the right side, assets are decreasing. Now, I said a number of times that we have the two sides of the equation. We have the assets on the left side, and we have the liabilities and the owner's equity on the right side. Now, you think about it, what is owner's equity? Owner's equity is what the owner has in the company. So when you make a debit to an asset, right, that asset's a debit, the liability will be the credit, because for number one, that's the opposite side of the equation. So if you borrowed money, it had to go up. And it makes sense because the liability goes up, you also own money. And owner's equity also goes up. Now, when a business is in operation and it's making money, right? So you have income coming in. What's happening? Obviously, the asset goes up. The asset is, whether it's an invoice or it's cash, the assets are going up. Which part of the other equation is being credited or going up on the other side as well? It's not a liability. You're making money. It's owner's equity. So revenue follows owner's equity. Or actually, owner's equity follows revenue. Because the company is making more money, revenue is going up, owner's equity is going up. Now, the effect of expenses in a business is that you're spending money, right? The asset, you're taking out money, you're taking out cash from the bank, and you're paying an expense. Now the assets went down, the company's value went down, you credited an asset, and now you're going to debit the owner's equity. Owner's equity is going to go down. And I'm going to show that to you when we go to the P&L and we are doing the expenses. And the same thing is if it was if you didn't pay the cash out, but you have a bill that we entered a bill, so now we're not dealing with assets. You can have also a debit and a credit liabilities on owner's equity. You have a liability that went up, right? You have a bill, and then the owner's equity went down. So the expenses, If you actually pay the expense, the asset is going away and the owner's equity goes down. The asset will credit and the owner's equity will debit. Now, if you didn't pay the bill, you have an invoice, you can enter the bill. So then the liability is going up because we owe it. Right? The cash didn't go out, the liability is owed, and that's the credit, and the owner's equity is a debit. We're going to see this now, and this leads into actually what accrual is about. When you have a business, there are two ways you recognize income. One way you recognize the income because you invoice the customer. The customer owes you money, you have a receivable, and you recognize income. But a lot of people would prefer not to recognize the income, because if you recognize the income, then you're gonna have a tax liability. Because if you invoiced $10,000 to people and you have $10,000 of income, you have to pay tax on the $10,000. And therefore, on smaller companies, the IRS actually lets you run a cash accounting, which is you only recognize income when you actually get the cash. Now, it's a double-edged sword, because if you can only recognize the income when you actually pay the cash, then you can only recognize the expense when you actually pay out the cash. You can't have it both ways. You can't say, okay, you know what? I didn't make the money because it's only an invoice to customer, but I will recognize the expense even though I didn't pay it out. It doesn't work that way. So right now we're going to close out this bank account. So we discussed over here, you see on the balance sheet, you have assets. And the assets, the total of the assets is, in this case, $4,000. This equals liability line and equity line. See, assets equal liabilities and the equity. Now, this is actually a balance sheet which we created. With all the transactions we did, we created this balance sheet. We have this, we put the money in the bank, we made these receivables, we have undeposited funds, right? We didn't deposit yet in the bank, Holtz Klopper's money. And we also started off the year with $70 undeposited. If you remember, we backdated 5-ish Glick, and there's a very important reason why I'm doing that. But right now, I'm just suffice to say that if you start the year with $70 undeposited, right, clear means already went into the bank. We started with 70, we still have 75. The total is 145. It shows you the flow. You had 70, you added 220, you added 620. So you really had 1290. We deposited 1220. We're left with 70 undeposited, and we have 145. These are our accounts receivables. And then we have furniture and equipment. What's our furniture and equipment? So our furniture and equipment, if you double click on it, if you recall, we have a $1,200 computer. We got from Office Depot. We have a $500, actually $1,200 copy machine, $500 computer, and $379 was other things we bought from Staples. Furniture. But these are assets. People, what is an asset? As the company owns it, right? The company has the cash. It's the company bank account. We have the receivables, and we have the furniture. But then again, assets get canceled out by liabilities and owner's equity, because the only way this whole company came into existence with the money in the bank and the furniture is we borrowed money. We borrowed money from Shimon's credit card, $1,200. We put in the company credit card, $879, which the statement will come soon. In effect, if you could check the furniture and equipment of $2,079 is the exact same amount of the liabilities. These are liabilities on credit cards. In addition, we still have accounts payable. We still owe, rather, the double click, we still owe several bills. We didn't pay certain bills. We didn't pay the Army magazine for $250. We didn't pay Con Edison National Grid. So these two alone, these three bills of Con Edison National Grid and Army is $704. Now, what would happen if we wanted to get rid of the accounts payables, wanted to pay the $704? Well, we have to take the money out of the bank. What happens if we want to get rid of the credit card bills and we don't have the money? So there's two options. Either we're going to increase owner's equity, meaning we're going to put more money into the company to pay off the liabilities, in which case liabilities will turn to zero, right? These two, we would have to inject another $2,783 have to pay off the liabilities. The member will have to put that in. And like I said, so the top part will be considered like it's number 2. And the whole middle part, which is liabilities, is 0. So then the bottom will be 2. Equity will equal the assets because liabilities is 0. But as long as liabilities has a number, the remaining will be owner's equity. And if we pay off everything, then we reduce, our assets come 0, and liabilities and owner's equity will turn to 0 in return. It means we could give away our assets, we could give away our cash, the owner will get paid back, the clients, the debtors will get paid back. So we'll have 0 on the bottom, right? Owner's equity will be 0, liabilities will be 0. The only way to do that is to liquidate our assets. When you liquidate your assets to 0, then the bottom can become 0. So this is the first rule of counting as assets equals liabilities and owner's equity. Obviously, QuickBooks does it by itself, but many times when people try to do it manually, you always have to check yourself. If you are not tying out these two numbers, you have made an error somewhere. Okay, I'm going to take a pause right now from discussing the balance sheet, and I'm going to look at the questions before I go over to the profit and loss. Okay, so we answer the person about this split, okay? Okay, so I see a question of MP that tells me that their total assets and liabilities is more, actually. They're 4137, not 4062. That means they have an extra 38, 30, so they have another $75. So they should check what do they, maybe they billed someone $75 more. So that's one way also to check, quickly check for errors. You have to check the change by subtracting the lower number from the higher number. If you take 4137 minus 4062, what's the difference? The difference is the 37 and the 38, which is 75. So there's a $75 number. It so happens to be there are 2 transactions that could be affected by 75, but really it's only one. There was a $75 transaction by I think it's Barish Holtzklapper. There is a $75 receivable left over, but that's not a 70. That wouldn't be your asset liability. So I would suggest that P look into that, or anyone else who has the same difference in owner's equity assets. Okay. One second here. And again, so bottom line is that if assets are going up, it's going to make, if liabilities are going up, the assets will go up. Because why do you have a lot of liability? You took money. So it's true, you owe money, you also owe more money, but the company has that money. When the company puts the money out, then the liabilities will go down. So there's a term called liabilities and assets have a relationship which are similar, right? It's called a direct relationship. Liabilities go up, the company's assets went up. It has an inverse relationship to owner's equity. Right? Liabilities is the counterpart to owner's equity, but the same thing, when assets go up, owner's equity goes up, depending, again, where did the money come from? Was it liability money or equity money? So the phrase is differently. It's not that we're adding liabilities to make the company's assets. What happened is that the company has nothing, right? The company's 0. Today we decided we want to create a company called We Do It All. We opened the file. There was nothing there. The company was 0. what happened? We added money from our pocket. So the first thing we did was we changed the owner's equity. We increased owner's equity. The assets went up in the same amount, same $500. What would happen is that we added liabilities, meaning we purchased paper goods. So we got assets, we got paper goods, but we got liabilities that came along with it because we didn't pay for it, or we paid for it later on. So another way to do it is if you take the assets and you take away the liabilities, what remains is the equity, which in a sense is actually what I put on the slide as well. Let's see if we could share this again without freezing the computer. That'll be very nice. Assets minus owner's equity, whatever, if you didn't put it in, it came from somewhere, it's liabilities. But usually we go in order because the first people we have to satisfy is liabilities. So the owner's equity can pull out his money and say, okay, now that I got everything I want, we'll figure out how to deal with liabilities. Liabilities have the first claim. Because they don't share from the profits, they have the first claim upon liquidation. So we also had here assets minus liabilities equals owner's equity. So you have the cash, you have accounts receivables, and once you pay off your bills and take your payroll and you pay off your loans and your mortgage, then after that, your net value is your owner's equity. So this is also, we had this written down, assets equals liabilities plus owner's equity, or assets minus liabilities is the owner's equity. This is going back to first class, okay? So now we're gonna go over to the P&L to understand income versus expenses. The income goes up, it increases with a credit. That's like owner's equity, right? If assets increase with debits, income increases with credits, and that raises the value of the company. Assets decrease with credits, right? And income decreases with debits. You could now, what does it mean income decrease with debit? Sometimes you have to give back money. Someone gave money, give it back. We're not discussing expenses yet. When you go to expenses, you say expenses increase with debits because the assets are going down with the credit, right? Assets go down with the credit. And what's happening is you're spending your money, right? You took out your assets and you're spending it on expenses. So if it decreases with the credit, your expenses will increase with a debit. And then we said there's one rule which you always see, that there's debits on the left and credits on the right. And this summarizes the assets. Where is this here? Assets, expenses, both increase on the left. Liabilities and income or equity decrease. And on the flip side, the assets are on the right side are going away. Expenses are also going away on the right side. And then liabilities, income, and equity increase. Now, let me go over to the profit and loss. I'll be able to see the debits and credits, how the income as well as expenses equal exactly what we just said. So we have the second report, profit and loss. Sorry, the last few questions, I called it when a computer froze. I logged out, logged back in. So the last few questions I didn't address. I'm sorry, you should repost them. I'm going to switch over about 9 o'clock. If anyone wants to do some audio questions, it'll be easier than typing. And I'm going to discuss right after the P&L how everything will look different under the cash. So now we have here this fiscal year, we have $1,710 of income. Now, if you would see on the updated syllabus that I sent out today, what is the true sales? The true sales, let's exit this one here. If you look at step number 8, total sales for 2020 equals 1710. Historically, it's going to be 1780 because we have $70 from last year. And that should be your numbers over here. Anyone whose numbers do not tie out, please stay on after 9:30 and we'll be able to try to help you out. So again, if I take the drop down and I would say, instead of this fiscal year, say all, you would see the number 1780. Actually, let me reshare the screen. Let's share QuickBooks. Okay, so again, we're sharing over here. If we would say all, the number here will be 1780. And if I would say only this fiscal year, the number would drop to 1710. Okay, it's showing here a net income of negative 791 for the year because we have total expense of 2501. That also was stated in our updated syllabus in step number 6 and the 7. Total expenses is 2501. Now, what are the expenses? We have the expense of $250. This is advertising. Double click. Ami Magazine. Okay, go back out of that. We have meals and entertainment, $120. For double, we know it's 76 and 44. I'm going to go out of that. Office supplies, $177. That was paper, that was rent. Utilities combined several things, $454. Let's see. 328 and 126. Okay. Now, in truth, our expenses, meaning we had more expenses than 2501. Right? We couldn't run our company just on $2,500. We have computers, we have copy machines. Those are additional expenses, right? But they're not really an expense because going to the I showed you before that the balance sheet is permanent accounts. These are temporary accounts, meaning every year our income number resets to zero, right? We have the 1710. So we made so far this year. And next year we'll start a new number. What's going to happen? We're going to take the net income of the year, which is the difference between the expenses and the sales, and we have a loss. So we lost this year so far $791. That's it. If today was the last day of the year, we would mark down a loss for $791, and tomorrow starts again from zero. The advertising is gone, right? We advertised. The meals, we ate it up. Office supplies, assuming we used up all the paper. The rent expense is also gone because next month we got to pay again for rent. And utilities is gone because next month there is new utilities. But the copy machine and the furniture is not gone because it's still physically here. It might not last forever, but you can say it's an expense. So that is something else which we'll discuss. It's on the last page of the syllabus. We discussed something called depreciation expense, which is recognizing the fact that certain items go down in value over time. And you have to recognize an expense because at some period, you're gonna have to throw out the copy machine and get a new one. So we're not gonna recognize an expense at the last minute at the end of 5 years from now. Okay, this year we had a $1,200 expense because the copy machine lived for 5 years. So really what happened is, as I wrote, that it had $240 was being spent every year for use of copier. And over 5 years, we depreciated the copy machine. But that is beyond the scope of this particular class. Right now, we're trying to bring out that we have here an accrual method, right? Our expenses is $2,500 in accrual, and $1,700 is our sales in accrual. What do I mean by accrual? That we're counting the sales we made even though we didn't get the cash for it. Even the sales we invoiced, the full amount of the sales. And these are the full amount of expenses. And the net income is a loss of $791. What would happen if I would touch the cash button? Numbers will change. All of a sudden, our sales went down. We only made $1,295 because if I go and click on it, right? It's true. The original amount showing us here is what's the invoices, but the credit amount, which is the cash, is only $1,295. So it's irrelevant what the total would have been of the original amounts of $225, right? We only got $150. There's an invoice, okay? And the total amount that we received is $1,295. For this year. The same thing is for the expense. The expense, all we paid out was the 2 checks that was done through, if you double click on it, was direct check, right? We said the difference of check and bill payment. We wrote out 2 checks. So that was cash. Went out of the bank. Office supplies was a check, or rather it was a bill payment. So you're going to have a bill. We paid off a bill. The original amount was $177. And again, you'll care, we're not discussing bank account, right? When we discuss bank account, the check is a credit. The check, there was an asset called bank account. We had money in the account that was a debit. So when you take the money out, it's a credit. When we're discussing expenses, we're discussing how expense increase with the debit. And this is you see right away over here, the debit. Now, I'm going to, for those who have the computer open or everything you're watching, there's another shortcut called Control Y. Control Y will give us both sides of the equation. You'll see here, in this case, that the expense was a debit, that was a check, but the other side was a payable. We had a liability because we entered a bill first. Because we entered a bill called credit, the expense is, that's how we recognize the expense. We had a liability of a bill of $177, and we had an expense. Let me close this out. Okay. Same thing is with rent expense. The rent expense was actually paid. Now, in the class in previous class, I wrote, there was a whole discussion about general journal. That was a personal check, how to do it. Not to confuse you, in the new one, I wrote that as a company check. And there's no harm done. We see over here, we had a payable of $1,500, and we have a rent expense of $1,500. Let me go back out of this. Okay, so this concludes the discussion. Again, I'll take questions of the profit and loss and the cash method, right? You see, we only recognize sales cash, meals, entertainment, office, and rent expense. And in accrual, rent will go up because we're recognizing, not rent will go up, the sales will go up because we're recognizing income even for invoices that are unpaid, and we are recognizing expenses that were unpaid as well. It goes together. You can't just have the one line change and not the bottom. Now, if I would go into the rent expense now in the accrual method, where is this here? On the okay, we not into the bill. Okay, I'm gonna pause right over here and see if there are questions here. Office supplies at 556. So again, what you do is you take the 556 and you minus the 177. You see where we offer $389. What is 389 representing? I know we got to find out. So we, utilities. That's not that. There's an error definitely. Probably the 389 that belongs in the. Okay, I'll have to deal with that shortly. Staples payment. What did you buy from Staples? What you bought from Staples, we discussed, was not supplies. It's furniture. So you got to go back and put it back to furniture. It belongs in other words, if you're showing office supplies at 556, you're not showing the right furniture of 2079. Then again, how would you do it? You will double click on the item on the check, and you will edit the account. Okay, so one last thing here. If I would go to company, make journal entries, and go back to the original entry, if you wanted to decide that really we took the money out of the company, not out of the personal, all you do is you type the word Chase, CH, and Chase comes up. So now we could reverse it. You know what? We pay the rent with a company check, not with the member's equity. So it was not a personal check, it was a company check, and I press save and close. So again, if you want to go back to what it says in the updated version, curriculum, actually that was the, it's not 100% negaya, but if you want to cross the T's and dot the I's, you go back to company, make journal entries, you do arrow back, which is to get to number one, and you just change members, where it says now members equity, right? You will write CH for Chase and press save and close. Note that when you change, what you're saying really is that this is the debit and the credit, that the crediting the bank, the money's going to the bank. So now if you go to the bank account, all of a sudden, you'll see that your balance now is negative $77 as it's stated in the curriculum. Obviously, if you but obviously by taking the $1,500 out of members' equity, the balance sheet members' equity be less as well. Members' equity only be 570, but we'll again, and you'll understand this. What's this 570? The $70 we saved from last year from 5-ish Glick, and the $500 we put in this year. I'm going to pause this instruction. In 3 minutes, I'm going to put a quick poll of 2-3 questions and see people's response. And I'm going to take audio questions as well. Let's see here. Okay, so we have here a question. Again, I emailed today on the updated email list, which I received today. So hopefully if you didn't get anything today, contact office, make sure to have you on their email list. Okay, you can go to this. This is a screen which I shared now. It's called a poll. And I think you should be able to vote on a question. So income statement accounts are known as permanent, temporary, an equity account, or none of the above. Let me enlarge the screen. There are a total of 4 questions here that we put in here. And let's see. And I think you could progress by yourself from question to question. So we're going to give about 8 minutes for everyone to give everyone a chance, give everyone more time. So 2 minutes a question. The counter is holding 3 minutes, so we'll wait 5 more minutes, and then we'll review the questions. And we'll discuss what is the correct answer. Okay, so we're at 60% there. We have 10 more people attendees who can still answer. Okay, we're going to end the polling over here. Okay, so the first question, income statement accounts are also known as what? So we discussed what is income statement? Income is how much money we made this year. That's on the P&L, right? We have the sales, the income, we have the expenses, and what's left is the net income. So this is all temporary accounts. The second answer would have been the correct answer because we said, yes, the income statement accounts affect the equity, but they are temporary accounts. As opposed to the balance sheet, which we said that those are balance sheet accounts which are permanent and they stay there. Okay, the share results. Okay. Next question. The item list can be accessed from which section of the home page? Let's see. If you would go to the home page, everyone could check out themselves. Where you go to company homepage, and you see where can you see the item list? And the answer is it's in the company section, companies, items, and services. On the menu bar, it's from the drop down, you find it on the lists. But again, what do you have from vendors? You get bills from them and you pay them. What do you have from customers? So they create sales orders, estimates, you make them invoices, you receive payments, and you give them refunds, etc. The items that you have, that's not a customer. It's not related to customer. That's part of the company section. Right? If you look at the home page, on the company, you have your chart of accounts, and you have your items, and you have your calendar. So that's what the answer, the correct answer to question number 2 is company. Okay. When you record a customer payment from a cash sale, so there's only one way to do that, and that is you create a sales receipt. When do you receive a payment? You receive a payment when you already invoiced someone, right? You invoice the customer, then you go to and you have an open invoice, you have to collect money. Then you right-click the customer and you receive a payment. You're receiving a payment for an invoice. So it's not a cash sale. The question is when you record a payment for cash sales, it's 2 steps. So maybe let's throw some people off as it says record deposit. Well, that will be the next step. You create a sales receipt, and after you have the money, you'll do a deposit. But receipt payments are for invoices. Because why should you, in other words, why should someone give you money? Why should you receive payment? You're receiving payment because they owe you money. And by the cash receipt, it's the sale and the recording done at the same time. Finally, the last question, which of the following increased owners' equity? And most of the people got that right. It's business profits. When you have profits, then the equity goes up, right? Income goes up, sales go up, owner's equity goes up. We saw that in the bottom of the balance sheet. Expenses drag the business down, right? The assets go down. Expenses, at the end of the year, the company is worth less. The owner has less equity. Dividends also, you would think for a second, dividends is money, but dividends means money goes out of the business. It pays out dividends. So then what's left in the company, the equity is less. And for sure, losses reduce the company. So I don't know if people want to share the results. And you could see, or actually everyone knows what they did on the. Okay, throughout a couple classes, we'll introduce like 3-4 questions at the end as a refresher towards the certification, which we discussed at a future date. The reward is what offers there are for getting certification in QuickBooks. We're here, the last shared screen we had in the balance sheet. You'll see over here that the net income actually gets added to the equity. This year it's a loss, so the equity is going to drop to next year. Yeah, if we take the 570, which we had, and the loss we had this year, which is negative, so then our equity right now is in the negative. At this point, anyone who has questions that want to go on the audio enabled, you can raise their hands. Again, the lists, the item list we get from multiple places. We get it from the drop down on the list. We get it maybe from vendors and items. The question was where on the home page. Again, the question was where on the home page do you see items? So you can do that yourself. Go to the home page, and on the home page you'll see here. Right now it's hiding. Here's the items and services. Right, this in the top right corner is items and services. So that's the question. We're on the home page. Okay, let me see the few other questions that were Q&A, and then we could take live questions. Mr. Shem will send you out the answers. Okay. 7. So before what was 30? Well, it's 32 because I counted 2 people. So. Right. So yes, QuickBooks certification is not through QuickBooks, it's through a third party. It's discussed later on in the course through Rabbi Wordy. I was just bringing that up that I'm introducing 4 questions per class as a review. How can you see what answered? Well, what's important is what you answered before. Right now, we know what the answers to the questions. We'll share the correct answers. We said income, accounts, our temporary accounts. To get on the home screen, the items, you go to company, and to record a cash sale, you would go to company, create sales, customers, create sales receipts. Okay, that's mostly of the. There was one other question, which, and we'll send it in the email. I think that's it for the Q&As that I see over here. And I'll be looking out for raised hands from the attendees. Hello?
No, it's fine. You answered my question. Thank you.
Okay, very good. Okay, does anyone else here have a question? They could raise their hand. Otherwise, we'll send out another slide, another form for the upcoming class. We have your Shimon, I believe. Hello?
Yes.
Yeah, hi, good evening.
Yes, hi. When do you look at a balance sheet and when do you look at a profit and loss?
Well, it depends what you want to. There are 2 necessary reports. One is telling you how you're doing this year, as far as income, and the other one is what's sitting in the bank. But the company is not growing with the money in the bank, right? The company always wants to make more money. Periodically, you want to see, how's the year doing? Was COVID a good year? Did we make more, make less? How were we affected?
All right.
So,
thank you.
No problem. Okay, Ms. Allen?
Yeah. Okay, wait. So the profit and loss is the current year? I mean, is
Yeah, profit. Well, again, it's all how you create the report. This report says in the drop down, I won this fiscal year. You could make a 3-year report. You could say, give me from beginning of 2017, or you could make a 10-year report, and you could sort it however you want, by weeks, by months, by years.
wait, so
again,
what were you just saying to the other person? That which one
the person was asking, when do you look at a profit and loss? When do you look at balance sheet? So profit and loss is a periodic report telling me how I'm doing now. What did I make in the past month or the past week or the past quarter? How are we making money? Profit and loss is how are we making and how are we spending money. Balance sheet is the value of the company. What do I have at the bank? What's my receivables? So receivables do change from year to year based on how you invoice people. But you will look at that. You could compare this year's receivables to last year's and see, if this year we have much higher receivables, it means someone's not doing a good job collecting the money, right? Just because you made the sales, if you don't get paid, it's no good.
Right.
With
Okay.
expenses, with the liabilities. If you think you're making money, but you're borrowing a lot more than you did last year, the question is why. So all the reports give you information about the company in like in a organized fashion.
Okay, thank you.
You're welcome. Okay, I see here Menachem has a question. And again, just a reminder, if anyone, one second, if anyone has numbers that are not tying out to what it said in the curriculum, or we see the balance sheet, please state, this is the time to ask. It's much easier to do, you know, when we're talking quickly back and forth, as opposed to ask me to give you 15 steps to verify things by text. It's not going to work. Okay, yes, Menachem, back to you.
Yes, mine's about that. So if someone has a shorter question, they can go first.
No, that's fine.
All right. So my balance is 3,992. So it's quite off.
Where in the balance sheet?
Yeah. Oh, you're doing your profit and loss now.
No,
Yes,
look at the
yeah,
balance
still off.
sheet and the accrual. So, okay, so I had to change something here. It would have been like 4,062 at the beginning of the class. I just went and I changed to $1,500. That's why I see Chase now as a negative. I played around with something here with the Chase account. But if you,
that's the
I
beginning.
could still troubleshoot you with your number, depending on again, what's your number right now?
3,992.
3,992, and before it was 4,062. 1 second. Okay, so what do you think is the difference?
Second. Case is obviously very different.
Huh?
No. I think
don't
yeah, it's undeposited funds. I have a difference of 70.
but you only have 140. You only have 75,
But,
right?
yeah.
Yeah, because you didn't have five-ish glick. Probably you never recorded his sale.
So how do I do that now?
You can do that, sure. But you have to backdate it to 12/28. 12/28/2019.
How do I do that?
So you do customers, enter sales receipt. Right, customers drop down enter sales receipt.
Yeah.
And you're gonna create a company, Glick 5-ish. In my case, I already have him here, but you could go.
Okay.
Maybe you created a
Yeah.
customer, but you didn't save the transaction. So you just put in here $70. But make sure the date, go back to the date and 12/12/28/19.
19. So it's
Yeah.
last year.
Yes, yeah, definitely last year. I was using that for two reasons. I was using last year's date to demonstrate to you the difference of a P&L from this year and last year, right? That's the P&L 1710 or 1780. Depends what's the period you're looking for.
Yeah. So it tells me
Uh-huh.
QuickBooks has detected that you have no items of the one or more of the amounts are not. Oh, yeah. What should I put in the item?
Oh, you have to sell. Well, we look at the curriculum. What did we say it was?
Yeah, I didn't get that. I didn't get the curriculum.
I see. Doing everything right. Sales receipts. See, it's for this card changes. It's for HK. They put in the item HK and $70. Like this, you could track that's housekeeping income.
Yeah.
So if you
Thank
go,
you.
go to P&L, what does the P&L say?
Oh, second.
If you go to the window menu and you drop down to profit and loss,
P&L says, yeah, same as you.
1710. But what happens if you would go and scroll up to all? You change it from fiscal year to all. What will be a new number?
No, I have 701, not 721.
1 second. What's your sales number? If you go to all,
My sales is 20 higher. I have 1,800.
1800. So maybe you type 790 instead of 70. Okay, so again, so you double click your sale, double click that button, and scroll down. These are all your sales. You have 70 to 25, 140. That's the beauty of QuickBooks, is that you can always double click and and see what's lying underneath. It's multi-layered.
Yeah.
When you have like spreadsheets, it's all spread very far and wide, and you get lost. That's showing your screen here. This is not spreadsheets. This is summary, but you could drill down. Okay, so what do you have here? What's off?
Yeah, I have 5 is split twice. I have once for 20 at the beginning.
Okay, so
Yeah.
yes, but that's all I'm going to answer you over here. But before you said you were off by $70 before. So
Yeah, I don't know, I have a couple sales off, apparently.
So just again, but you might still end up with a different number in the balance sheet, because you're off by 70, but now you created 70 here. You see you're off by 20 still. So you must have plugged
Yeah.
the 20 somewhere.
Yeah. Okay, I'll take a
Yes,
screenshot of
so
this and I'll try to.
So reach out to the
Okay.
office tomorrow. They have I copied them. They have the updated curriculum, and like you'll see, I'll just on every step, it's summarized.
where I
what's
went
the
wrong.
what
Yeah,
after every
where I went
few.
wrong.
I'm sorry. What did you say?
Where I went wrong.
Yeah, you'll be able to see where you want. Yeah, it's,
Okay, thank you.
it can help you find the puzzle. No problem. Hello.
Yes, okay. So by my balance sheet, my total is 4,137. So I'm off
Okay.
by $75. So
Okay. Right, because 4,060. The right answer would be 4,062. My thing that it's 1,500 different, because I was demonstrating how you could just shift the personal check to the company check. That's the difference on the asset end, right?
that's not what I'm talking about. On the balance sheet,
I'm on the balance sheet, so now I have to find the difference between you and what I had before. So what did you?
it's
What's your number?
$75. We're $75.
Okay, so we know a $75 transaction. That's a Holtzklapper. We discussed them last time. So
Right. So
Fun-
how do I go finding it out? Like how with
well, it's very simple. Well, you break it down by sections. Is he in your accounts receivable, or it's undeposited funds where you have 75, more or less? You have double. You have 220 in your undeposited funds. You have 490 in your account receivable. Where do you have 75 extra?
very hard to see the both screens together. Let me just see. First of all, my Chase, for example, says 603, while by you, Chase says negative 77. Why is that?
Okay, so because again, the issue is more than 603. Let's do it this way. Double click on your Chase. What do you see as your deposits on the left side? Your $5 deposit.
So I have $500 debit, and then I have 177 credit, 76 credit, and 44.
Just the debits. What are the deposits? 500.
Debits are 500, and then 400 accounts receivable.
No. Accounts receivable is not in the bank. Again, what do we have in the debits?
The debit side, I have 500 members deposit, and then another deposit from 400.
No, the deposit is supposed to be 1220, because we deposited 3 amounts, if you recall. So let's do this. Go to banking, use register. I could have done the other way also, but we see what's the deposit of 1220. If you double click on it,
What does it mean, use register? What does that mean?
I'm using a checkbook, the bank checkbook, as opposed to getting report view. This you want to see what it like as if you had a checkbook. The register is also in like if you would have had a ledger, so there's a cash ledger. The old-fashioned checkbooks, when people used to have lines where they write where the checks go and where the deposits go in. So it's a check. They call it a check register.
Mhm.
So are you inside your bank
Yes, I am.
register?
Yeah.
Okay, so after so you have to double click on the 400. But truth is, it's not so much the 400. You have to deposit two more things. We have here 670 from Ploni Almonis and 150 from Yankel Chaim.
So how do I deposit them?
You go banking, make deposits.
Mhm.
Right? Banking, make deposits.
I see. Okay, so that's what I didn't do. Okay.
But again, the $75 off is a different issue that we didn't resolve.
Okay.
One thing is that you have to get your bank balance. You had more money in the undeposited funds. You had like 700 or something over there.
Right.
Okay, so but we're not depositing everything. Right now, we still left. You go to undeposited funds. The only thing that should be left is Holtz, Klopper, and Glick. You wouldn't see them over here in this thing. You have to go to the chart of accounts.
1 second. How did you get to this transactions by account?
You double click on undeposited funds. Everything that has an arrow, you click on a number, you could go into it. Furniture and equipment, you'll see. These are our assets.
Right. So where did you want me to click?
You have to go line by line. What's your accounts receivables right now?
Receivable is 15, which is no good.
$15?
Yep.
Right. No, accounts receivables is 415.
Yeah.
So I would suggest you have to go through the step by step in the curriculum. It gives you after you enter all the invoices, it'll tell you how much is supposed to be by the total invoices. You'll see that. You'll see the total of the bills that you entered. And
Okay. Because what I have is like all the debits, like from the 4 people, Yankel Chaim and Mrs. Cook and Cohen and Almoni, and that equal to 1635. And then I have all the what they paid equals to 1620. So that's the $15. That's all.
no, you overpaid too much. Well, what money did you get? Mr. Cook paid nothing.
Mrs. Cook.
People keep asking what's on account. On account means that they're not
Right.
paying.
Oh, wait a second. I see already. I see Rabbi Cohen. I have him twice for 400. How do I deduct? How do I minus him?
You got 2 payments from him.
I did get 2 of them for 400.
No, I say so you have to go into one of them, double click it, and then there's an X where you could delete it.
And 1 second, I double clicked, and where's the X? I don't see it.
Under the ribbon, and then towards the left. When you go down to the menu, what's here? Scroll, close X's out. You see in customer center? Or any case,
I double clicked on it, and it opened up to received from Rabbi Cohen.
Yes. So then you don't see an X right over here in the middle,
Nope.
right at the ribbon. On top of customer payment, right in the word customer, there's X called delete.
I don't think I'm on the right page then. I don't see it.
No, go back, you have to go to customer center. Oh, you have to go to customer center.
Okay, yeah. Okay,
And you go to Cohen and you have your two payments. So go to any one of them. Actually, you have to go to the one, make sure that's not checked off your payment. Otherwise, you're gonna have unapplied payment. When you
So
double click the
what-
payment, you see a
Right.
check next to it.
I have like, I mean, again, I'm by customer information by Cone. So I have an invoice of $600 and then a payment of $400.
No, you have two, you said you have two payments of 400.
But here I don't see it. Before I saw it by Chase, I had two payments. I think I went back to banking and I did it over there. Maybe I made an extra deposit or something. Weren't
You
you
made a deposit.
record something, then you have to go to the bank and deposit it?
You just, again, we discussed a couple of times that when you get money from a customer, it's not in your bank. He gave it to you in the store.
Right,
And QuickBooks is not going to put it in the bank because when you look at your bank, you want to know if you can write money out, right? You
right.
can't write money out until you actually deposit it. So there has to be an act, a conscious act of making a deposit for the customer's payments.
Mm-hmm.
It's not, I mean, QuickBooks, it's not like a game. Okay, I got the money, it's in my bank. No, you received the money, thank you. Now
Right.
it's an undeposited funds.
Right,
You cleared out the invoice, but it's in a holding tank somewhere. It's in your safe, it's in your briefcase, it's in wherever it will be. It's in transit until it goes to the bank. So make deposits when you actually bring it to the bank.
right.
So that's, you have to go to the bank. We have the $400 and delete it. There's no $400 deposit. There's
I just did that, yeah.
but again, taking it out of the bank is not enough because all it means you change your bank balance. But as
No, I
far as
deleted it. I deleted it.
you deleted the payment.
Mhm.
So right now, when you look at Cohen's name, you see $200 outstanding
Let me see. So where would I go to see that?
at customer center.
Customer center, okay. Okay, so what do I see? Let me just see. Yeah, $200 balance.
Okay. Now you go back to your balance sheet, and you have to see are you 4,062?
Let me see. No, I'm still 4,137. That's very interesting. But it was only that $75. It was only $75 difference.
So
What-
those we had multiple differences. One is that you had the extra $400 separately in the bank. Again, you have to. I told you, look at Holzklapper because you have to zero in on what is the two possibilities. I tell you, one is the
Okay,
Holzklapper's
so I go
Price.
to customers, customer center,
customer center. Yeah.
okay,
And
and
besides,
then Holzklapper,
and
but
the second thing
Holzklapper
is that
tells
you have
me zero. Holzklapper,
zero. I understand, but what? How many receipts do you make from one or two? If you have two sales
I
receipts
see that. Where do I see his receipts?
in the right window,
Okay.
if you got two sales
customer-
receipts, that means your income went up. Your assets went. Your sales went up.
So I see 600, the invoice of 600 and a payment of, that's what I see.
No, you're
Oh, wait a
highlighting
second. No,
Cohen.
no, I'm not.
You're highlighting Cohen. You gotta
Yeah,
highlight.
I'm sorry, yeah. All I see is a sales receipt of 75.
That's it. So guys, you have to go. Again,
Undeposited fund.
I asked you before, where is your difference in the balance sheet? So I know it's $75. But I guess evidently you need a little more information. Is your furniture and equipment 2,079?
Okay, let me go back 1 minute. So I'm going where to,
Furniture and equipment.
The balance sheet, you're saying? Okay, 1 minute. Okay, the furniture and equipment is 2,079,
Good. Undeposited funds is how much?
is 1,440.
Undeposited funds from the first thing is you do banking and make deposits.
Okay.
You have too much over there.
What do you have for undeposited funds?
One for 145. So it's all there. Your $75 is there. Something's wrong. So that's where you're gonna find the mistake. Go to banking and make deposits.
Okay, so,
You make deposits, you should get a little screen in the center.
and how do I
you
make deposits? Again, I go to banking and I go to make deposit.
Yeah.
Okay, and what am I depositing? Like, let's,
Slow down. Wait.
Please.
Let's see who's available for what's available for deposit. It says payments to deposit. Screen like I have.
what, under Chase?
What about you? Did you wait? You went to banking,
Right,
make deposits. Okay, so you X out this window because something didn't go right. If you X out the window, the lower X can go again and do banking, make deposits. You should have a little screen, a sub window in the center listing what are the items available for deposit.
I don't see that. I just see the actual big screen that says received.
I understand. What? I understand that. That's what I told you. You have to X out that screen, not the top X that will close your whole QuickBooks. You have to take the second, the bottom X, close the bank, close that, and go again and redo it.
By transactions by account.
You X'd out the make deposits.
Yeah,
Good. Go again and do banking, make deposits.
okay. Okay,
You should have a little screen popping up.
yeah, now it popped up.
You're good. Now, what do you have available for deposits?
Okay, so I have Bayrish Holtz is 75 and then 5-ish Glick 70.
Okay, right, ignore those two. Next.
What is that?
Ignore those. We're not depositing those.
Okay, so then what are we doing?
And what else is there?
There's Chaim Yankel, there's Rabbi Kol.
How much Chaim Yankel?
Chaim Yankel is 150 with Visa.
Okay. Well, actually, he wasn't Visa. He was check. He was
Oh, he was
check number 102.
right, check 1102. Right.
Okay, so you click him. Next, you're selecting that. What's the next thing?
Okay, then we have Rabbi Cohn for 400 with a credit card.
Okay, you just click that.
Okay,
What else do you have?
and we have Ploni Almoni for 670 paid in full.
Good. Click that. What's the total?
That is
So it's about 1220, right?
1220. Yes.
Good. Okay, you don't have another $75 there?
How much?
You don't show another $75 payment for deposit?
Yeah, that was for Barish Holtz. No, there was a receipt actually of 1 second. A payment? No, I don't have a payment.
Okay, do this. Deposit the 1220. First of all, get it out of the way.
So how
First
do I
of all,
do that? How do I do that?
You already highlighted those three, right?
Right.
And tells you payment stub total 1220 over here. Press OK.
Press OK.
Yeah, and
Okay.
save and close
Save and close. Okay.
and done. Next. What's it? Go back to your balance sheet.
Okay.
What's going on now? What's your bank balance?
1 second. Balance sheet.
Actually, yeah, what's your undeposited funds right now?
Undeposited funds at 220.
So you're 75 too much. So go back again. Go bank and make deposits.
Okay.
You're gonna have you have to have 275s or 170. That's just the math.
Okay. So I have
I don't-
75s and 170. Yeah, that's what I have.
I know, and then that's not, it's only 175. I tell you that before.
Okay. All right. So
you have an extra payment there.
so
And
what do I do?
that extra $75 in deposit represents too much of an asset of 75, which means
Right.
why you are. So
Okay, so how do I I see now I have two, one is Holzbeirisch and one is Holzklapperbeirisch. How do I get,
last we went through that last time. You wanted to delete a person,
right, so how do I?
and you couldn't
delete
delete. And I told you can't delete a person until you delete
it? Okay,
the
fine.
transaction. And I told you have to delete the transaction. We never deleted it. So now go to
Okay.
Holtz and delete a sale, and then
And how do I
you get
delete
that.
it again? How do I delete it?
Okay, you go. You have to go to the customer center,
Okay,
and you have to go to Holtz.
it's not letting me.
That's
One
why.
second. Okay, customer center, yeah.
Yeah, do you see a Holtz there?
Oh, but now I only see Holzklapper. And
Yeah, because
Zero.
you couldn't delete him, but you deactivated the other guy. So you have to go and um,
Holzklapper is 0 over here.
no. You have to go to active customers and all customers.
Yeah,
You see?
yep.
And when you go to all customers, you'll see someone else. You see like Holtz here, and you go into him. But basically, this is what you got to do. You got to go and
Okay, but right here, Holtz is 0. Cy Holtz and Cy Holzklapper are
I understand. Of course, it's 0. They don't know you anything. It's 0.
okay.
But if you go into their name, you'll see that there's a sales receipt.
Okay,
These numbers of balance is due, right? Over here, you have only balance due, only for an invoice. If they paid you up, of course it's 0. But you double recorded in 2 sales receipts.
okay, so how
So either
get rid of that 75?
you have to double click the sales receipt and delete it. It's not going to go by itself.
So again, where's the sales receipt?
The bottom right window. You're going to see it right here.
1 second, where? By customers, by where?
Okay. Are you in customer center?
Okay, now I am.
Okay, we were there. I never told you to run away. On the right side, it'll give you details for each client. So if you highlight either Holtzklapper or Holtz, on the right part of the window, you should see sales receipt.
No, I don't see sales receipt on the right side.
The bottom right is there. Look at my screen. Do you see my screen?
Now, 1 second, let me minimize. Where's your screen? Let me see. Okay, I don't have your screen.
I'm on Zoom.
No, I see you. Customer information. By me, it says customers and jobs, all customers. How do I get the customer information?
There might be an arrow on the left side that makes it bigger and smaller.
Nope.
Listen, all the software get installed the same way. I don't customize it. So unless you're playing around with something there, it should look the same as this.
Okay, now I got it. There was an arrow all the way on the right side. Okay. Okay, so now what?
What do you mean? So now what? You got to go to when you see the sales, you say delete. I don't care which one you delete. You delete Holtzklapper or Holtz, but I have to move on to the next student who's waiting. That's a question, but this is you have to delete one of your sales receipts. That's what you got to do.
Okay, even though it says 0.
Again, forget what it says on the left side. The left side is only what's the open balance.
Okay.
You got to delete a receipt because you recorded too much money.
Right.
You double billed an invoice. The guy's gonna put a dispute on your company and he's gonna sue you.
Mhm.
What's the difference? I tell you, you got to delete one of the receipts. Okay. So I think Olivia had a question before.
Okay, thank you.
Hello?
Hello?
Yes?
Hi, how are you? Yes. So on my balance sheet, I just want to double check with you. I have it at
Yeah.
4,000, the discrepancy of 1,500. So
You have 4,062, right?
yeah. Do you want it to be that number or the other number?
So I
2,000,
demonstrated how to do it.
2562.
It's 2562. That really ties out with what I wrote over there. I just said you go to the general journal and just change that $1,500 from members equity to company.
Can you
to
show me how
Chase.
you did that?
Yeah, you go customers. I'm sorry,
Customer.
what am I talking about? No, company. Journals are in company, journal entry. And you go back to number 1. And you see you had accounts payable, 1,500, and originally you had members equity.
Yes.
So you just change it to CH, which is Chase. And then it's going to shift. Instead of having extra owner's equity, that's called what they call an inflated balance sheet. That, we put more money and the assets look bigger. So I put another 1,500 and the company looks $1,500 more assets. Instead, I just moved over. I said, I didn't put in the money. I'm taking it out of the company. You see that?
Yes.
So if you say, and then once you put Chase and you save and close, it's going to automatically change by itself, the whole balance sheet, because this act of, you basically pulling back out, you're debiting, you're debiting the equity because you're saying, I never put in 1,500. What you are doing is you're crediting the bank because I'm taking the $1,500 out. And in that one act, you're going to reduce from 4,062 to 2,562. So I could wait. You could confirm that. Is that what happened?
Oh, yes, got it.
Yeah. All right. Sure. Okay. I may had a question.
Hello?
Yes.
Yeah, I'm trying to fix the total assets. I have 3877. I tried to go back. It looks like I did everything correctly. I don't know where's the
Okay, so
problem.
the correct number would have been either 4,062 before. You have what? 3,877.
Mm-hmm.
So the difference is $185.
Right. And the total
Yeah.
account payable are minus 796. Undeposited funds are 320. Total accounts receivable.
Okay, that's
200.
exactly. Well, yeah, that's the difference. The difference of 145 to 320 is 185. So that's exactly. There's something wrong that was recorded extra in undeposited funds. So the way to do that is instead of double clicking on deposited funds, because that only gives you a general report, you have to go to banking, make deposits, and see who do you have to deposit. Banking, make
Who
deposits.
do I have to deposit? Let's see. Make
Yeah,
deposit.
banking, make deposits, because there should
I
only
have Glick 5-ish, 245.
be doesn't go. 5 was only 70, so that's the difference. 245. That's $175. But you're still $10 off. Who else do you have?
And Bayerish Holtupper, $75. Those two.
That's it.
Yep. Who else is missing? I deposited everything else, like
No,
Chaim Yankel, I did,
One
Rabbi
second,
Cohen, I did, and
was it
Antonio.
245 and 75?
Yeah. Glick is 245 and Bayerish is 75.
Okay, so you gotta go back to the customers
Yeah.
center.
It's not letting me click it. Click it
No,
one
no,
second.
customers on
Customers,
top.
yeah.
Customer center.
Customer center, yeah.
Go to Glick.
to Glick. Where is it? I have Cohen, Cook, Plony Almoni, Yankel Chaim. Why do I have two Yankel Chaim for some reason.
Okay. But you said you have a Glick, right?
I did. It's not appearing here though, not under customers. Why is that?
Maybe you say them as different names. So
Oh, so I have two Yankel Chaim. Maybe that's why. One is 140, the other one is 225.
okay, so double click on the 220. Well, that's 1 second. That's fine. It is 225. It's invoiced.
Right, but then the other one is 140. I have two
That's
Yankel Chaim.
Mrs. Cook is
That's the
140.
mistake? What?
The 140 is supposed to be for Mrs. Cook. What do you have, Mrs. Cook?
Oh, okay. I don't have him on the list of customers. I have two Yankel Chaim.
Okay, so you have to. So you could go to click on the go to Yankel Chaim that says 140.
Which one
There's
is
a-
right? The 220? No,
220 was right.
the 140 is the mistake, right?
So what's the difference? You could edit the customer. There's a button on the right side, and you can edit and
Okay.
just change it to Mrs. Cook.
Okay.
It
To
tells you that bounces-
no, to Glick, you said.
No, the 140 is Mrs. Cook. That's one thing.
Oh, Cook is 140. I have that. I have
You have
Cohen
that.
600, Cook 140, Plony Almoni 670, then Yankel Chaim 140 and Yankel Chaim 225. So here's the mistakes. I have.
You said,
What
yes,
is
it's a ship.
140?
There's no, but again, your problem is $185, not just $70, right?
Right, but what's the 140 I have here?
Okay, go down the list. What is the open balance from Cohen?
Do I see that? To go to Cohen? Cohen paid 600 in full.
No, he didn't. He paid 400.
Oh, 400. Yeah, yeah.
So it doesn't
Yeah,
show
I
you.
see it.
Do you see an open balance of 200 on the left side of the
shows-
screen?
1 second. There's an invoice here. How do I see that? 1 second.
Okay, I'm not in transactions. I don't know why everyone started getting lost in the transactions tab. Customers and job tab. There's 6 customers here.
Customer center, right? I have Cohen 600. Yeah, and it says open balance 200.
Okay. You're not
And
in the same,
then
wait, you're not in the same screen that I am, right?
customer information. I am on, no, what, again? I'm on customer.
I didn't leave. I didn't leave.
And customer center.
Are you in the transactions tab?
I don't think so. I'm going to customers, then customer center.
Right. So you don't see on the left side, like the split of screen. There's a bar on the left side with a list of customers, and the right side it shows you the customer information.
No.
Yeah.
It says estimate, sales order, invoices.
Against you're in the transactions tab.
Wait, okay.
Get-
I have it.
Get
Yeah.
out of the transactions tab.
Yeah. I have it. So I
Yeah.
have Yankel Chaim 215. I'm starting from the top. I'll start. Beirish is 0. Cohen 60.
It goes alphabetized. So the first one would be Cohen.
Cohen is 60.
No, it's 200. So that's, you have
Total
140.
balance 60. Why does it say 60? Yeah, it should say 200.
So now you look on the right side of the window.
Yeah.
Here, he has an invoice of 600.
He has. Should I click on? He has an invoice.
Once you highlight,
for-
first you have to highlight color.
Yeah. I did.
There's an invoice of 600.
Of 400.
The invoice is how much?
It says customer information 400.
On the underneath, under customer information, the bottom section, it looks like a register also. There's a line for invoice, a line for payments.
Screen customer information. Yeah, all payments received. Transactions, it says 400, Visa.
How do you back the, what's the first thing? You don't start with an invoice?
Your screen, 1 second. Okay, 1 second.
Yeah, I need you to look at the screen that I have shown, because otherwise
Yeah, I'm looking.
not on the same screen.
I'm
I
looking
cannot
at the
do it.
one you're showing me, yeah?
Right, so there's a left bar, which shows a list of
Right.
customers.
Okay.
On the right side, there's a window here.
Mm-hmm.
Right, so what do you have under Cohen?
Under Cohen. That's what I have. I have trying to let's minimize the other half. Okay, so that's what I have. I highlighted Cohen, and under customer information, I just have 400.
What does it show on the first line to the left? It's a payment, it's an invoice.
It
it's a
doesn't
receipt.
show. It doesn't show. There's nothing there. Nothing is written. It just says Visa with a date and then 400.
No, you're not in the same window that I am in.
Yeah, but I guess I didn't mark what it is.
I don't
doesn't
show
say-
visas. This section here, just type, number, date,
Right.
account.
It says date, pay, amount,
Before
and
that,
it just
wait, there's on the type. What does it show on the type?
under type,
Yeah.
it says number, NUM. It doesn't show.
That's M. Then there's one column to the left of that. This thing called type. Are you looking at a tablet or like a mini laptop?
No, it's a split screen on.
Yeah, that doesn't
I
really
don't
work.
have that.
It's too
That's
small for
weird.
you. Don't get, maybe exit split screen, and you have to. I think you have to alt tab between things. If it's too small, you're not. Maybe that's so it hides some part
That's
of
so weird. No, I made it bigger, and I see only there's no tab like that. It's only the date, the number, and then I see 400. I'm on exactly the same page as you. I don't see type.
this. Okay, so think about it. How can he have a balance of 200 if he paid you 400? Then you don't have no invoice.
Right. So how is it 60?
You're missing information here. What can I tell you?
Right. Okay. All right. I guess I'll go back and I'll see what's. I don't want to keep you, but yeah.
That's
I
one
guess,
of the
but
Cohen.
how do I get, right, but then Cohen is 60, I don't know, I have to look at that, then Cook is 0.
I don't know.
Glick also
Maybe
0. Yankel, it says minus 75, I don't know why.
minus 75 because
Yeah.
because you overpaid. You collected 75 from him on top of an invoice. You got it twice as a negative.
I have to get rid of one Yankel
Instead-
because I have 2 of them.
Actually, maybe you received two. I think actually you received 2 payments of 150. So you go double check. You received 150, and you received the second 150. So give you a credit. So go look into that. Maybe you have 2 payments of 150.
And
That
how do
actually
I
help.
get rid of one Yankel?
I don't care if if you have 3 ankles over there. I care that you have extra transactions. Once you delete, I don't care how many customers you have. It's one. I don't want you to have extra transactions. You go to Chaim Yankel, and you look and you see if he has 2 payments for 150. If he does, you delete one.
And
Actually-
how do I delete
Actually,
one
I think you
customer?
discussed it before. Did he pay you with a? You told me he paid you with a Visa, and then you told me he paid with a check. So he paid you twice 150.
And how in general do I erase one customer? How do I delete it?
You can
If I
make him
have to.
inactive. If he has transactions, you can make him inactive. Want to delete him, you can't have any transactions under them. Because deleting a customer means you're deleting what's there, but you can't delete what's there because it happened.
Oh,
You can make it the customer inactive.
I see. How?
Let's first figure out how to get the balances right before we try to figure out how to do extras. So
Okay.
again, look at Yankel Chaim. Do you see 2 payments of 150?
Um,
You don't even see an invoice.
1 second. Oh, what happened here? No. I clicked the Yankel Chaim. What do I see? I see 150. Is it in a check? Check 1002. That's it. Only one. And then the other Yankel. Let me see. No, the other Yankel is minus 75. Nope, so it's not that problem. I think I just recorded two Yankel. I have to get rid of one. One is Yankel Chaim and one is Yankel. I don't know why.
Yeah, I understand, but it's not with the names. You have extra, you recorded extra transaction.
Mhm. So I guess I'm gonna have to look it through.
You
Okay,
review
I'll
it with
let
the
you know, I
curriculum.
guess.
Go step by step with the curriculum. Go
Okay.
look.
Okay. Okay, thank you so much.
Sure, no problem. Hello? Baruch, I have a question.
Hear me?
Yeah.
Thank you. Okay, so my balance on my Chase account was was like plus 43, so I had to add the Super 13 and the Essence for it to be minus 77. But
Okay.
now when I go to the balance sheet, my total assets, liabilities, and equity is 2442, which I think is less than 2562. So that's the $121 or the $120. So did I deposit it wrong?
Well, look at the four parts of the balance sheet in this company. You have the bank account, the receivables, undeposited, and the assets. So
Undeposited.
you look at each line. It's not
Furniture
like,
and equipment. They're all 145, 145. Total current assets is 483, but I mean it says 363. But the undeposited funds is 145.
undeposited is the same,
Yeah.
right? And what's
Total
account
current
receivable?
assets is different.
What's account receivables?
Account receivables is 415.
So that's also correct. What's your bank?
Minus 77.
No, one second. What's your
Chase is minus 77, but total checking and savings is minus 197. Why is that?
Okay, because you wrote you already you have a Citibank, you have a second bank account.
No, but for some reason the Chase and the Essence and the Super 13 looks like it's done twice. There's a Chase which is minus 77, then there's the Essence which is minus 76, and a Super 13 which is minus 44.
Where's that?
Under in checkings and savings, the first line is Chase, which is minus 77.
You created a bank account called Essence and
Super 13.
Super 13. You created bank accounts and you took out money out of those bank accounts. So just go into just delete it. Then doesn't create those accounts. You have to write a check to that name.
Okay,
so if you
how do I
just delete
those?
it, well, just go. I would say go Control A, what's chart of accounts, and you see on the top you have a bank called Essence and a bank called Checking. The first delete again in order to delete the account, you have to delete what's inside it. So double click on each bank account and delete those two things.
Okay. The account called. Yes. So how do I delete it? I clicked on the account.
Okay, you go Control A, all on the top, you see Essence and Super 13 by the banks.
Yeah. I love
So
all that.
double click the bank Essence and delete the payment. And then you'll have the option in the bottom to delete the account as well.
The bottom just tells me either record or restore.
Right click the check and delete it. When you go into
Okay, delete check.
yeah,
Okay.
so, okay, close out. Then go back to the other one, the
Record.
Super 13.
And then again, Super 13. Delete check. And record. Now, okay, the bank is -77, but if I go to reports,
Okay, you see I have a QuickBooks message. Let's say I try to delete my Chase account. We'll tell you QuickBooks cannot delete account because it has a balance or it's using at least one transaction.
right?
So they tell you can make it inactive if you want. And then that's all. Anyway, so now you could right click those two accounts and you can go delete because there's nothing inside it. Or actually, once it's zero, it'll show up in your balance. It won't even show in your balance sheet. If you go back to the balance sheet without deleting it, even it's not going to be there. So now, what's your assets now? 2682 or 2562? I mean, 2442 or 2562?
2562.
Good.
Okay, thank you.
You're welcome. Hello? Mr. Meltzer has a question?
Hi, sorry. I think you answered it, but I was having a hard time following. Basically, I also, sorry, let me get my thing out. I won't take all night. My QuickBooks also has the balance sheet as 4,062 for total liabilities and equity. I know
The 4,000 is fine because $1,500. I explained that I could just shift it over from if I
the owner's
I
equity, right? Yeah,
I
but
took out the equity and I took it out of the bank, so both sides go down by 1,500.
I don't know how to do that. That's my question.
You have to go back to that. Well, in this case, it's that journal entry where we paid for the rent.
But when
So
I go to journal, so you go to
Journal.
accountant, make general journal entries, and then it says whatever. And then make journal entries.
I go back. No, I go back to what was there before. I'm modifying the original entry.
So I see accounts payable 1,500, members equity 1,500.
So just highlight members equity and change it to Chase. I said instead of raising my equity and raising the asset, I pulled out the equity and I pulled out of the bank. So both sides changed by $1,500.
And I save in new or I save in close?
Just save and close. It's not a new transaction. It's not new.
You have changed. Okay.
Yes. No, we'll change it. Okay. Sure. Hello?
Yes, okay. So,
okay, I just have 2 minutes left over here, so if something I can help you with.
okay, so when I look at my balance sheet, you have -77 by Chase. I have 1423. So
That's
it's
fine. That's fine because
46.
that means your assets, but your assets is 4,062.
Yes.
So that's a difference. 50. So then you're fine.
Why is that? Why is your
Because I just finished explaining to the lady before, and the person right before him, that I moved $1,500 from equity to and I pulled that out of the bank. We modified the general journal.
Mhm. Okay, so then I'm good.
So,
Very, very much for taking the time to explain it.
yeah. So again, right? It doesn't. I mean, I don't think it won't really make a difference for the purpose of this. Sorry, of the what's it called, of the P&L. This $1,500 this affects the balance sheet. You know, is it more equity and more assets, or it's less equity and less assets. But that's the same. As far as profit and loss, it's not going to change anything that happened this year.
Okay, thank you very much.
You're welcome. Okay, bye. Okay, wish to give everyone a good night. We'll see you next class. Look out for information.